Second floor.
We'll see you around the timeline. Feels good to be back.
I think The Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
you on the show.
Yes, sir.
We're live. It's going to be back.
Boys are back.
We're in New
Yes,
York.
sir.
Go Knicks.
Knicks game 4 tonight. Whole
make it
city
happen.
burned down.
Yeah, it's pretty
We're
nuts.
going to be live from the bar, 6:45 p.m., waiting for the 8:30 p.m. game. Man. Let's go, Knicks.
Knicks are up. Market's down.
I got my Mikhail Bridges poster here for you guys. Let me show you guys.
Yeah, let's see what's going on here. We're in the studio. It's ETHConf. Ansem's saying take profit is 0 on ETH. Well, you know what?
Let's go, Knicks.
Fuck your take profit.
Let's go, Knicks.
Let's go, Knicks.
Let's go, Mikhail Bridges.
Game 4.
Boys are on. Let's get
Let's
it.
make it happen.
Guys, welcome back to The Rollup. You're watching here live from the Tokenization Tower.
The Tokenization
Nest.
Tower. The
Yes.
Nest. We're here.
The financial capital of the world. Today is Wednesday, June 10th. It is 12:44 p.m. Eastern time. Our bags are down. SpaceX IPO is coming on Friday. Liquidity suck. Vampire attack on everything. I don't know if we're buying SpaceX IPO. I'm probably not buying it. I don't think my investment plan is changing based on SpaceX IPO.
I think SpaceX has an opportunity to do well, given that it's first. I think there was almost like you can almost look at like the Monad Mega ETH, like one token launch after another, as I think maybe a testing ground for what's going to happen in these IPOs. But I mean, it's another low float, high FDV
That's what they're
shitcoin,
calling
if you ask me. SpaceX.
That's what they're calling it.
I mean, 100 times earnings. So they have these massive contract with Microsoft and Google getting paid billions per month, and they're still at 100x because they're going to build data centers in space, and that's what's propping up the valuation. So I think,
I do feel you though on like it's the first IPO of the bunch.
Yeah.
And so like, you know, there may be diminishing liquidity from SpaceX to Anthropic to OpenAI into the rest.
So if we think about the capital formation here, my understanding is that they need 75 billion was the IPO raise, that threshold that they need to hit. They're actually oversubscribed.
Yeah.
Where do you get 75 billion or 200 billion from?
Well, you sell some other stuff.
You sell some other stuff, right? And then that stuff goes down, right? So you use that stuff to buy the SpaceX, but then 5x of the initial float is going to be unlocked over the next 6 months. And so in theory, that's a lot of supply overhang. And SpaceX could then, you know, maybe it has an initial couple of weeks, couple of months, it does well, but then that goes down. So then you have the things that you sold to fund the thing, those things go down. Then all the supply gets unlocked, that thing goes down. Then both things are down because you have all this new supply and liquidity on the market. Then you have the next IPO, probably Anthropic, I think is gonna, I was looking at the Poly market this morning, and I think Anthropic is set to go maybe September or October.
Yep.
OpenAI before the end of the year. So I think it's going to go SpaceX, then Anthropic, then OpenAI. And these are going to have diminishing returns because when you sell to fund the other thing, but then both things are down, then what are you going to do? Sell lower to buy the other thing that's going to come out next? They're going to continuously just way down, way down, way down.
We'll see.
I'm pretty skeptical of
I think there is a
IPOs.
play. I think there is a play on SpaceX,
What's the play?
guys. As always, we're here at the Nest, powered by Plume, on-chain asset management infrastructure. Their Nest Vault product, EtherFi, just deposited $100 million into Nest, so shout out to Plume. Guys, let's get into today's topics. Welcome back to the tower, Rob.
Feels good.
Feels
good to be back in the
Markets,
city.
weather. Cypherpunk CIO, the Chief Investment Officer, Will McEvoy. They are a Zcash treasury company. Give us the update on Ironwood on the Zcash bull thesis following the shenanigans. We booked this out like 3, 4, 5 weeks ago. Took a while, but finally we got it done. Interesting timing. We've got Reilly's founder, head, joins in the show, as well as Chainlink Labs global head of CeFi strategy and sales in the studio. As always, our topics are powered by our friends at Trezor. Use code ROLLUP10 at trezor.io to get your hardware wallet. Guys, we made the tickers bigger for you. We made the sponsors bigger for you. We made the logos bigger for you. Thank you, guys.
Thank you, and shout out to the team behind the scenes working to implement our new overlay system. This is the worst that it's ever going to be. It's only going to get better from here. I'm excited. We're working on a couple of data partners that are going to bring some more sophisticated,
Yeah.
more robust data for you guys. And I think there's a lot more that we're going to bring for you guys in terms of variety, content formats. Andy and myself were scheming last night. Whenever we get together, we get some bigger ideas happening. And so I'm very, very excited to be bringing those to you guys. Of course, today's topics, powered by Trezor, the best hardware wallet in the game.
Is Vlad still coming on today? Yes, he is coming on today, but we're just going to do a recording at 4:30, and then we'll probably drop it sometime later this week. So, yeah, that is going to be not live today, but will be on the recording. And then Ayob says, enjoy Rollup TV vibes all the time. Good to have you back, buddy. All right, guys, let's move into the markets and weather. Before we do, let me tell you about Frax, our premier stablecoin partner. Open, stable, borderless, the future of digital money. Visit frax.finance to learn more about Frax. Guys, it is a beautiful 79 degrees, partly cloudy, beautiful day out. I mean, it's hardly cloudy. I mean, it's a little bit hazy, but I mean, you can see everything out there.
It's good. I had a nice walk from the hotel into the office this morning. It's a beautiful day. Lots of Knicks gear out on the streets.
I bet.
Knicks are here for game 4. They're taping off the area around my hotel.
Yeah.
So that's just going to be interesting. I'm prepared for a wild evening.
Yeah, they're trying to not have the Knicks fans obliterate the Spurs fans in Spurs jerseys this time.
Yeah. So we're going to see how that turns out for the lads.
Yeah.
But yeah, beautiful weather. Couldn't ask for anything better, really. This weather is powered by Reilly, and we're going to get Reilly co-founder Peter Watts in the studio today. They've been sponsoring our weather from Florida to New York. Anywhere you need to go, Reilly can take you there, will take you there. Reilly.link for all your cross-chain needs. Excited to chat with Peter later today. Interop has really shifted. I've seen all of these interop protocols sort of become this liquidity operating system. This is sort of what I'm hearing across the aggregator space. And it's basically like you have this one-stop shop. It's going to end up being more in the back end, right? Especially as we see more agents, agents doing transactions on chain. And so it's really kind of like you kind of have this liquidity you can pull from anywhere. You can serve it anywhere. Where, you know, centralized exchanges, decentralized exchanges, this bridge, that chain, this chain, they have the liquidity. They can serve it anywhere they need to go.
Yep. And Near Intense obviously just got integrated with Hyperliquid as well, guys. So we're going to cover that. That is our weather for the day. Let's get into markets. Before we do, let me tell you about Denari, our tokenized equities partner. Visit denari.com to learn more about on-chain equities and more.
And you can't hear the sound effects. I hear applause for Denari in my head.
All right, we got
sounds
some green
great.
Here.
Yeah, so
A
this
little
is
bit of
sort
green?
of just before we went live, we were starting to talk about this where the leaders of the cycle, Hyperliquid, VVV, Near, Near is holding up pretty well around that $2 level, but the rest have sort of broken their structure.
Yeah,
whereas
completely.
Bitcoin and ETH are now holding or green, which I find a very, very fascinating development. I think what we're seeing here is maybe some take profits on those initial rounds.
Of course.
Or those initial growth, those gains.
Yeah.
And now things like Bitcoin and ETH are just starting to maybe find some support here. So
I don't know. I think they're getting ready for their
next leg down.
For their next little move down as well. I mean, we'll see. We will see.
Well, this, I mean,
it's
obviously
hard to know.
the thesis is, you know, we're selling ahead of these IPOs.
Right. I mean, Venice down 13% today, guys. Zcash just down a little bit. Hype down 4%, under 56. Damn it. What a round trip that was, boys. Guy comes on the show, Capital Flows, love the guy. He goes, Gamma Squeeze coming next 60 days. I think there's still a chance for that. Obviously, we're about 1 week into the 60 days here. But man, in my experience, whenever we have a thesis that something's going to go a lot higher due to some extraneous circumstances, when it's already gone out high, it is oftentimes telling. So we'll see. We'll see if we get that back. I would like to see it back, but yeah, like Bitcoin's not making new lows, but the leaders are. And yeah, guys, I mean, I'm sure you guys are looking at your Near, Hype, Zcash, wondering, or Lighter even. Look, I think they're all still really, really solid picks. I just think, you're going to have to be a little bit more patient. You have to wait a little bit longer.
The leaders are no longer the leaders. You know, we had a friend of the show in the studio yesterday, or in the office, just holding a meeting, and we were talking a bit about the buybacks meta, if you want to call it that.
Yeah.
Also related to the digital asset treasuries, given Tom Lee and strategy, and how these buybacks aren't necessarily to push the price up, but take supply off the market.
Yeah.
So that when prices rebound, those coins are that much more reflexive because they don't have as much liquidity in the market.
100%.
And I think, we had this round of leaders. We had, Venice, Near, Hype, Zcash. All of these were the leaders. I think that those four were categorically the leaders in revenue, privacy, and AI. A lot of those all sort of, put Zcash aside, but the rest of them have revenue, right? They all sort of share, these three categories. They all kind of had that narrative trifecta. And a lot of them were starting to use their revenue for buybacks.
Yeah.
Again, in a down market, we're not especially if Bitcoin's going down, we're not going to see the relative strength trade. I think that thesis has been invalidated. Strong opinions loosely held. We're open to changing our mind. In an up market, I think these are going to outperform. And depending on how much time passes, what narrative, changes, and how things shift, the supply dynamics, if there is supply taken off the market because of Hype buying back their own token, it's no longer on the market. You can even take Sailor, Strategy, Tom Lee, Bitmine. They're taking ETH and Bitcoin off the market. Eventually, if buying power returns and there is no longer that supply in the market, these things are that much more reflexive.
Yep. 100% agree. And I think it's not similar to the Clarity Act, similar to the Genius Act, similar to the regulatory side of these big announcements. These things take a while to have a real impact. They take months to years. Beef.hl says still bullish Hype. Us here as well. Obviously not going anywhere there.
It's an incredible business.
Very bullish Hype. And this is only gonna, I don't think the USDC treasury yield buybacks are priced in. That's another $175 to $200 million a year of revenue. Guaranteed revenue just from T-bills. I don't think that's priced in yet, guys. But I do think that's one of those things where, Rob's saying, this is a year from now, there's going to be a dramatic amount of the supply of Hyperliquid off the market. And in a more reflexive, bullish environment for the majors, Bitcoin especially, ETH, that matters. Right now, it's a narrative. It's great. I don't think it matters as much. But in a more reflexive environment, the supply being off the market, even though everyone hates Sailor right now, everyone hates Tom Lee right now, the supply of these large assets being off of the market in the future is going to have a real impact. There will just be less supply when there is a bullish trend forming.
Sailor and Tom Lee are both at a similar percentage of their network, right?
Yeah.
Both of them are kind of at 4.5% to 5% of network ownership.
And Tom Lee just keeps buying.
That's meaningful.
Beef.hl says correct. Yeah. I mean, look, that's kind of...
Well, the numbers behind what you're saying, too, if we're looking at the Hyperliquid case, obviously, Sailor with respect to Bitcoin, Tom Lee and ETH, all of this remains true. If we're looking at Hyperliquid, there's some stats around the USDC sitting on Hyperliquid. It's about $6.5 billion.
Yeah.
That USDC earns 3% interest. 90% of that interest now gets funneled into buying Hype.
Yeah.
That means $175 million per year for buybacks, $14.5 million per month, almost $500,000 per day. That buys about 7,700 Hype per day at current price. This is 28% more than what the assistance fund was already buying.
Exactly.
Again, that may not have an impact on the price right here, right now, today. But 6 months from now, macro environment improves, right? Liquidity returns. We're past this IPO phase. The general bullishness returns, Bitcoin bottoms, we end up higher. And, there's 28% more Hyperliquid off the market than was previously already getting taken off the market. That is going to add extra reflexivity when the macro environment is more conducive to the upside.
We agree. I think we agree, guys. Hold tight here. Powered by Zama, as always, our markets. Visit Zama.org to learn more about their confidential privacy solution. Guys, we're going to move into the news and what's been happening. Before we do, let me tell you about Near. Using Near Intents for private payments, using Near.com, one account, no borders, your financial life on chain. One of the best products we've used on chain for managing your portfolio. That is Near. All right, guys. Tulip King comes out and says he is excited for our lovely friends in China to provide us better models. What does this mean? What does this mean? So Fable, the Claude Mythos model dropped yesterday.
Yeah, so Mythos dropped, but it was Fable is this neutered version of Mythos, in which they are essentially reading your prompt and they're throwing it away if it has anything to do with the categories that they deem high risk, meaning cybersecurity, meaning bioweapons, creating bombs and hacking software is what they're concerned about. So they're not going to let you ask Mythos any of those prompts. I did see the benchmarks. The numbers are higher. It is on these benchmarks. It is substantially better at these things. I have not had a chance to try it out. What Tulip King is saying here is that he looks forward to our Chinese brothers liberating the knowledge from this Fable 5 or Mythos model and selling it to me at 5% the cost and 2x the speed. He's referring to the open source landscape in China.
Yeah.
Kimi K2, DeepSeek V4, these are the models that are bringing us. Look, it's not, if you have, Fable or Mythos at 100% intelligence, these things are like 90 to 95%.
Really?
So it's an incremental drop in intelligence, but it really is magnitudes, like 10 to 20x more affordable.
Yeah.
I mean, someone said they put $50 into Claude. It took them 10 minutes of Fable to use up their credits.
Yeah.
So you could get more, you could get a lot further along with some of your prompts by using these Chinese models. They're just going to distill these Mythos models, which means they're going to train DeepSeek and Kimi based on Fable and Mythos. They're going to use it and just ping pong back and forth and say, hey, get all the way up to speed. So it's basically like, all the points program yield farming type of, activity, user activity. It's like points farm user activity, these Mythos Fable models to the nth degree, slam it with prompts, learn everything you can about it and teach yourself about that, how it responds to certain prompts, what it says, so that your model becomes that much better.
And then just implement it into this open source Chinese model.
And then sell it for that much cheaper.
Marvin says, seems like the individual Tau subnets that have real revenues and even profitability, Bitcast, don't get the valuation that they deserve. Dude, I was very impressed by the Macrocosmos conversation yesterday with Jake. I'm going to look at that BitTensor subnet because so subnet 1913, Macrocosmos. I mean, so here it is. So they actually just quote tweeted us and said, thank you for the mention. And I mean, this is the one, Marvin, that I think has the most potential is Macrocosmos. And I don't know what the ticker is, but from our conversation yesterday, they have achieved 100 billion parameter model in a decentralized fashion, which I guess it's subnet 1, subnet 9, and subnet 13. So it's 3 different subnets. I should have asked Jake how to get exposure to that. But that was the one that I was really impressed with from the BitTensor side.
Yeah. So again, guys, there is this secular categorical trend happening. Revenue plays a big part of this. AI plays a big part of this. And we're going to continue to see this happen. None of these are going to survive a Bitcoin bear market. I think that is just the reality of the situation.
Yeah.
However, things are going to bottom. We're going to return to normal. The market is going to get disillusioned. But once you have billions of dollars of revenue over the course of a year, and these things are going and actually accruing value into the tokens, the market will become more connected to these fundamentals. And I made this point yesterday. I mean, for so long, there was no fundamentals and no revenue.
Yep.
And the market was disillusioned to the upside. The market said, hey, we don't care about fundamentals and revenue. We're going to price your token at billions of dollars FTV anyway. Now the reverse is happening. We're disillusioned to the downside. There actually is fundamentals and revenue. But we're not going to price your token there because now there is still this market disillusionment. Eventually the market becomes rational again. Takes quite a while.
I agree.
Takes quite a while. Stay patient out there.
And you kind of have these assets like Zcash, like some of these others that you don't really need revenue necessarily, like more of these store value assets. I mean, Ethereum's trying to kind of operate in that space. We'll see what the what the road there entails for ETH. Guys, we've got Will McEvoy in the back. He's the CIO at Cypherpunk, a sick name for a digital asset treasury company. They've accumulated, I think about like 2 to 3% of the Zcash supply. He is a relentless Mert bull poster. I love it. Whenever Mert comes on our show, I see Will bull posting our show. So I absolutely love to see that. And we're going to get Will up. We're going to talk Zcash. We're going to talk Ironwood. We're going to talk what the hell happened, how bullish these guys are, their accumulation plans, whatever we can get to, Rob, we're going to talk about it. Let's get Will up. Let's get the show started, guys. And again, let us know in the chat if you guys are wanting to ask Will something. Will, welcome back to the show. Actually, it's your first time. Welcome to the show.
Hey guys, how's it going? Thanks for having me.
Yeah, man, it's going well.
Great, man.
It's
Welcome
going well.
to the show.
We're in the Empire State Building together today. It's a semi-rare occurrence. We're usually Florida and New York, so we're here for ETHConf, and market's down, but things are buzzing. Institutional bull market, a lot of good action happening. Will, so how's things on your end?
Good. Yeah, I mean it's been an eventful week in Zcash for sure, with the bug being sort of found and then quickly patched, and I think we're just entering into a very interesting time with AI being used as this just super powered audit mechanism for all these protocols. And but yeah, it's been a crazy week in Zcash and broader crypto. I think markets are also insane right now with the SpaceX IPO and so on. So pretty crazy time.
Oh yeah. So Will, maybe you could just, we had Mert on. He walked us through this, the potential vulnerability, and now the hard fork and whatnot. Kind of described what we're seeing play out before us. Maybe you could just describe, like, where were you? What were you doing when you heard about this? And tell us, like, your emotional roller coaster as you've been reacting to the same things that we've been reacting to with respect to Zcash.
Yeah, no, it's a good question. I mean, we're in close coordination with the major development labs in Zcash, right? So Zuko at Shielded Lab, Josh at Zottle. You also have Dave at Valor, and you have Sean Bowe at Zcash Foundation. So they all, we were in close communication with them. I mean, I was at the office kind of chatting with them about it, sort of next steps. But broadly, I mean, it's just, from my perspective, such a massive win for like the Zcash community, right? And it really actually, more specifically, what it shows is how high quality our auditors and our security engineers and our cryptographers are, that it was able to be found in just such short succession after Opus 4.8 came out, right? So I think that's like amazing. And I think also that it's going to be really interesting to see over the next few months as like, Fable 5 can't really be used for security audit, but as even 4.8 is used to audit other crypto protocols and then also non-crypto sort of digital systems.
Yeah, man. I mean, it's better to be in front of it than behind it, right? And I think that one of the big parts about this Ironwood upgrade coming out that we heard about from Mert and also read about was the embedded formal verification in the privacy system inside the ZK circuits. And, people have been saying that this is just another reason why privacy on chain is extremely difficult, because essentially we're all used to this verifiability on chain, right? And like, it's very, very important to have this ability to verify things in a democratized fashion anywhere in the world 24/7. Like, that's like the primitive. A lot of the world doesn't exist on that primitive, but in the crypto industry, that primitive is key. And so this formal verification property in Ironwood enables that while still enabling the privacy aspect. And, we've also just seen a rise of AI linked exploits in DeFi. I mean, it's just been ever growing. And so just to kind of like put these two together, when you guys are looking out from the Cypherpunk perspective on what Zcash, the investment thesis, is becoming, how has this kind of transition of dealing with this Opus 4.8 Claude white hat vulnerability into a formally verified Ironwood upgrade in the kind of era of time that we're in, how has this materially adjusted or altered your broader Zcash thesis? Has it? Has it not? Kind of just give us a bit of insight into the way you're thinking about the investment thesis as of now.
Yeah. So one thing that is core to our investment thesis, and we've known this since the beginning, we've known this for years, is that the community of security engineers and cryptographers inside of Zcash is second to none. I mean, you just have such high quality engineers auditing the code base, and then also upgrading the network, right? So there's a ton of great upgrades. There were even a ton of great upgrades before sort of the bug in Ironwood with Tachyon and so on. So the fact that this bug was found in sort of the manner that it was, it just gives us even more confidence of how high quality the space is in terms of talent. And it's not dissimilar from when you're investing in any sort of other business. If you're doing venture, it's largely about the team, right? How world-class are they? What's their moat? How differentiated are they as operators? And as it pertains to Zcash specifically, there really is not another group in crypto that is as world-class as the folks working at the protocol layer in Zcash.
Yeah. And I take it when you're going and you're talking as a digital asset treasury company, part of your job is almost like this investor relations, go out, advocate for the protocol and find, structural capital allocators that are aligned with the thesis. We've had other treasury companies. We've had, Joseph Shalom from ETH. We've had a number of other treasury companies come into the studio and on the show. I take it your conversations are probably quite a bit different than some of the other treasury companies that we have on the show. They're looking at maybe, protocol metrics, revenue for the chain. What are some of the metrics that you're communicating to these capital allocators? When do you see their ears perk up? When do you see the light bulb moment in them and they ultimately take steps to invest?
Well, first off, I want to flag that while we do have a digital asset treasury, our treasury is denominated in Zcash. Yeah. We obviously hold a ton of Zcash. The end goal for us is very much not to be just a DAT. Like, I think DATs were maybe this thing that happened in the, this transition period where crypto is becoming mainstream and traditional financial markets want more exposure to them. So our goal is to certainly accumulate a ton of ZEC, but also make other investments in and around Zcash. But also in and around privacy, because we think the sort of the long-term bull case for privacy is certainly the strongest in crypto. I think it's one of the strongest in technology, certainly in the context of AI, when privacy can be viewed as this sort of other side of the coin to AI in a sense. But when we're talking to investors, that's really the thing that resonates the most, right? Sure, you can point to certainly the ZEC price action has been very good in a period of time where broader crypto markets have been down. You can point to the shielded pool. You can also point to, like I mentioned earlier, the talent in working on Zcash. But at the end of the day, it's pretty clear that privacy technology is a widely important hedge against surveillance, against sort of some of the negative externalities of AI, because you can just sort of simply make the observation that we have never had less privacy than we do today, right? So, and this has sort of just been a trend since the advent of the internet. We've, maybe stepwise down from the internet, then phones, another step down, social media, another step down. With AI, it's a very large step down. It's a very noticeable step down. So those are the things that resonate the most with investors. And with all that in mind, there's also this observation that no one is really working on privacy, especially in the public markets, right? Like Apple likes to say that they're super focused on privacy. Yeah. But there really is not, outside of us, another public company focused on privacy.
I saw an Apple ad focused on privacy the other day. I think I was watching the NHL Stanley Cup, and it was talking about how using Safari is like the best form of privacy in the internet today. And I thought it was quite misleading, actually.
Yeah, yeah. Right down the street from our office, there's a big billboard that says like, yeah, Safari, the most private way to browse the internet, and it just obviously skips over a massive handful of considerations that any like actually privacy concerned individual would have.
Yeah. Yeah. So then, when you're speaking with, allocators who are interested in Zcash, they've seen the performance, right? There's not that many ways to buy Zcash exposure in public markets. And I think the core value prop is shielding it anyways. When the conversation from your side is happening with large scale investors, anything from like an asset management to an endowment or anything in between, is the Swiss bank in your pocket? Is that like the big breakthrough? Like with Hyperliquid, it's like they make this much money, they buy back, they have tokenized, stocks, everything on chain, great. Bitcoin, it's like digital gold. Ethereum, there's some question marks, there's kind of different explanations. Is the conversation like, is it as, because I mean, for us and for CT and people who understand, it's like, it's private Bitcoin. But people get really annoyed and they say that that's misleading. And then it's like this kind of like Swiss bank account in your pocket from like the understanding of using ZODL and shielding your ZEC or shielding your ZEC. When it comes to like the larger scale investors, is it could you just give us a breakdown of, it's kind of building off what Rob's saying, but like, is it just as simple as this like private form of like this private store of value, kind of what Bitcoin was supposed to be? Just talk to us about what that light bulb moment really is.
Yeah, so I mean, over the past 5 years, for better or for worse, institutional investors have been orange pilled, right? Like you have all these institutional investors that went out and bought Bitcoin. And now it's becoming like pretty obvious that Bitcoin has this one major flaw, and that is that it's fully transparent. It really wasn't thought about that much 5 years ago. So the pitch to those sorts of investors is like, hey, look, sure, like I personally, I don't think Bitcoin's going to zero, right? Bitcoin's what got me into the space. It's super important, so on. But if you think Bitcoin is valuable, right, for all the reasons why you think Bitcoin is valuable, surely you would think that a private version of Bitcoin should also be very valuable, right? And then you can sort of have a conversation around like what actually is the right market to compare it to. But it is that those are sort of the core of the conversation that we're having. It's private Bitcoin, it's private encrypted cash, right? And again, it maybe wasn't as clear. Well, it certainly wasn't as clear several years ago that privacy was super important. But now with AI and just how easily you can dissect any like public ledger, you can also like bring in other information that's been like leaked through hacks, or even information that you've posted individually on social media, like just totally willingly. You just put it all together, and it's becoming pretty clear that AI is going to make a lot of really crazy connections. It's going to completely de-anonymize Bitcoin, and that's why I think a lot of investors are thinking about Zcash as a hedge to Bitcoin.
Yeah. And I think we've seen that as well. Bitcoin has gotten more institutionalized. It's gotten ossified. Obviously, it was sort of the initial, original cypherpunk currency, but things have changed. Michael Saylor has come on the scene, and like you said, most of the institutions have gotten orange pilled, and that means Bitcoin has gotten institutionalized. And fundamentally, the thesis and value proposition of Bitcoin has changed since its early beginnings. And if we're looking at Zcash, it enables a lot of the cypherpunk ethos that Bitcoin originally had that it no longer has. I'm thinking about how we've sort of gotten to this Zcash moment in recent time. Near Intense, which is our AI partner, shout out to Near, they helped open up this Zcash composability with sort of the rest of the crypto ecosystem, helped a lot of people find Zcash and ultimately get involved with it and kind of unleash this ecosystem. I'm curious, as Zcash becomes composable with more of the on-chain ecosystem, we've kind of seen how that has led to its success in terms of price, but Bitcoin becoming more composable with the traditional financial system, as an analogy, has institutionalized it. How much do you think Zcash becoming composable with the traditional system, the rest of the on-chain ecosystem, how much could that potentially lead to the institutionalization of Zcash like it has the institutionalization of Bitcoin?
It certainly could lead to the institutionalization of Zcash. I certainly think there is a role for Zcash to play in, if you are a corporate or a company or a government, like obviously you don't want your entire treasury like fully transparent, right? That's like a national or a massive national security issue. Right now in Zcash, we're super focused on making it more usable, more scalable, right? Such that it can be used, it can live up to this expectation of sort of unstoppable private money that we talk about. Josh and Zottel are leading the charge on that. Super important company. You could sort of think about it as like the front end for Zcash. If like the exchanges, right, the centralized exchanges acted as the front end for Bitcoin back when Bitcoin was super difficult to use and it was like hacks and you had to go to these like sketchy websites to get it. The exchanges played a super important role acting as the front end. So that's what Zottel's focused on. I think that's sort of the core lift, right? Make Zcash more usable, more adoptable, increase demand from like a grassroots perspective. And I think if you do that well, the institutions come, right? They eventually come. That's what happened with Bitcoin. But yeah, there is some lessons to learn from the institutionalization of Bitcoin, right? Because did we, I was in the space, a bit back, and everyone would talk about, well, it's going to be so great when all the wealth management platforms have like Bitcoin on their, available to their clients, and it's like we get that, and then okay, like is that where we're really gonna sort of taper out or stall out, right? Now that all the people with big retirement accounts can put 1% of their money in Bitcoin, it seems like a pretty sort of hollow place to land. So I think there's some lessons in that, and I think I think that's just important to highlight.
Yeah.
What's your like craziest Zcash adoption theory? I'll give you an example. Like
Dogecoin interplanetary money.
So I had this theory for a while that, Elon's got Dogecoin, Elon's going to go to Mars, we're going to need an interplanetary commerce system. If Elon is the governor of Mars, he can set up the currency, he can use Dogecoin as that currency. Totally out of left field, totally wild theory, probably less than 1% chance that it happens, but who knows, maybe, it's far-fetched. Do you have a similar Zcash adoption theory? Like, what is the 1,000-year Zcash is still around? What does it look like? What is the theory?
Well, I don't think this is going to happen because this would be extraordinarily bleak. And like if you take the sort of like the Peter Thiel school of thinking around this, it's like, well, the risk with AI is that we devolve into some sort of thing where it's like one world government. If you have one world government, you probably are in this like totalitarian, authoritarian situation. There's one currency. It's very 1984-esque, right? They just, you wake up one day and the money's not in your account, or you go to the store and you want to buy this, but no, you're not allowed because of XYZ reason. In that dynamic, Zcash is like the real cypherpunk like rebel money. It's like what you would use to fight the the tyrannical sort of AI overlord in a sense. And look, I don't think that's going to happen, but I think that's your sort of crazy. That's what I would say in terms of like the crazy 1% or even less than 1% outcome.
Yeah. Will, kind of something on that note, as well as on the previous question, is there's been this rise of private stablecoin and confidential transfers, right? So Near Intent has a confidential intent product. You can send different assets cross-chain confidentially, you can do payroll, etc. Zama's working on some interesting stuff here as well. I feel like part of Zcash's value prop was around this, like being the only private way to send assets on chain, store assets on chain. When we have a world where we also have private stablecoin payments, private cross-chain transfers, do you believe that the utility or thesis of Zcash from being like private money, private kind of medium of exchange needs to shift into purely a private store of value type of asset? We have not really seen the proliferation of private cross-chain payments, private stablecoin payments yet on chain, but it's very, very close. Near and Zama are both doing incredible work, amongst others, Tempo, etc. You might not agree with all the exact same privacy things, whether it's the TEE model or kind of like private zones, but the reality is that's happening. And I think Zcash had a massive wedge there of being the only private transferable asset. That's not going to be the case in the future. Do we need to reposition or just like rethink around this just being like a private store of value rather than like a cash or a medium of exchange? Perhaps this is like far too nuanced of a question and a take, but this is happening on chain. What do you think of it?
Yeah, no, I think it's a good question. So certainly I think Zcash is a great private store of value. It will also be a great private medium of exchange with like Project Tachyon, which will scale the network. But to answer like the beginning of your question, like I think that with privacy, a lot of it's like the devil's in the details with a lot of these protocols, right? So I view Zcash as like true cypherpunk privacy. You hold the keys, you have this optional shielded thing, or this ability to shield. It's like true privacy. It's backed up by cryptography and code and encryption. There's a whole spectrum of other types of privacy things. The ones that I fear the most on the total other side of the spectrum are these things that are like Web 2 privacy that we're just picking up from Web 2 and porting into crypto, right? And saying it's like, oh, it's like as private, it's not fully transparent like Ethereum or Bitcoin, but it is, it's about as private as like AWS or something like that, right? Like in that dynamic, like who can actually get at your information or your data? It's like, well, it's like who set up the contract and who owns the database and who has the servers, and like can the government give like a subpoena to this group, or like a random government can they get at the information? So that's not really that interesting, I don't think. That's like not true privacy. That's sort of this sort of fake, very hollow privacy that we've had for the past 20 years. So with all that being said, yeah, I think some of these sort of more Web 2 privacy applications make sense, in isolation. But at the end of the day, Zcash is true privacy. It's true cypherpunk privacy, and I think there's just like an immense premium to be put on that.
And one of the things that I wanted to kind of also touch on that note is about the quantum nature and the post-quantum nature of Ironwood, and then into
Tachyon.
Yeah, exactly, this Tachyon upgrade. What is the material? Like, we're somewhat technical, like we can understand kind of blockchain architecture here. Like, what is the material change that is going to be required to take Zcash from where it is today to a more post-quantum ready state? I know it's being worked on actively, and this is another advantage to kind of Bitcoin and other networks, is this, while immutability and ossification is great from a value prop perspective, it also is kind of damning in a way, especially with quantum and with AI, with things changing so fast. You guys are able to kind of be ahead of that. What does that post-quantum roadmap actually look like from a technical specs of evolving the chain to be post-quantum ready?
Yeah, so there's certainly folks that are much better at kind of walking through the roadmap here. There's, I mean, absolutely world-class quantum cryptographers that are at work at this. I would just say, like, in terms of where we stand today, Zcash just has this advantage over Bitcoin because the public keys are shielded, right? In sort of this quantum attack scenario, that's the attack vector, right? So Zcash has an advantage from that perspective over Bitcoin. The other advantage that it has is that the community is actually focused on it, right? It's not just Bitcoin. The community is not focused on it. In Zcash today, it's not perfectly quantum proof, but there is a roadmap in place to get there over the next several years.
Yep.
But yeah, there's folks that can go super down the rabbit hole on that stuff. It's quite technical, obviously, but it gives me a lot of it gives me a lot of confidence that folks in the Zcash community that we're close to are working on it, and it's just really puzzling that some devs in other communities are not.
Yeah.
Or even prioritizing it or addressing it as an issue. One more thing from my side, I think Rob's got something as well. This shielded term, like, I think it's sexy. Like, I think it's like cool. It's like in the know. It's kind of like Zoomery. Like, I think it can catch on because privacy is not sexy. Like, the people that care about privacy, they are a very slim majority, and it's one of these things where there's like a stated belief and then there's the actual desire, and oftentimes people say like they want privacy, but their behavioral habits do not actually align with that stated belief or stated desire. So privacy's kind of got this interesting property from like a cognitive and human, like deep human level. But when it comes to like the branding of the shielded concept, like, do you think this is sufficient to like catch on to like a mainstream, like architectural, like dialogue? Like, is this shielded brand? Because I know Zama's doing a bit here. Zcash is obviously pioneering this idea. Near's kind of hopped it on.
Shielded is the new modular.
Right, like is shielded the brand that we can take Zcash and privacy and make it sexy and make it mainstream? How do you think about kind of like the brand of privacy to make it appealing to the mainstream?
Yeah, that's a really good question. I am a fan of the shielded branding. I'm a fan of a lot of the branding that we've developed in the in the Zcash ecosystem, whether it's encrypted Bitcoin or unstoppable private money or private digital cash. I think all of these things are catchy. They're also accurate. I think that from a marketing perspective, you highlight something which I think is generally, there is some truth to it, that people may say they want privacy, but then their actions are different from actually, that. I just think that's going to change pretty drastically. I think that we're going to have I really wouldn't be that surprised if there are these like significant privacy scares, right? Driven from AI, just driven from the fact that everything's so interconnected now. There's just so much information that's public about you. And I think initially, I mean, this is already true, but initially there's just going to be this small growing population of people that are like, well, yeah, that's a major risk. I need to have a private store of value. At the very least, just as like a hedge or sort of like for your rainy day fund, like your emergency fund, right? And then that grows and grows sort of in parallel to AI becoming sort of more integrated in your life, right? Because at the end of the day, you're going to want to give as much information as you possibly can to AI, because that's what makes it helpful and that's what makes it beneficial to you, right? So I think as you're doing that, as you're noticing that wow, this like thing knows so much about me, like literally knows what I'm like thinking and what I like love and what I hate. And it's like, oh, it's like kind of weird now. I think that's the trajectory we're on. And that's why we're focused on privacy broadly, right? Like Zcash is going to be the important sort of financial privacy asset. But I think there's a wide range of privacy technologies that are going to fit other use cases that are just going to be wildly important for everyone to adopt.
Yeah. I want to circle back to a question that Andy asked around kind of this like private stablecoin thesis, almost like the Zcash currency thesis, especially because this is where there was a lot of adoption after Zcash became more composable and liquid and accessible to many. It almost feels as if, you kind of kick back to Bitcoin in 2016. We were having the block wars, right? The block size debates. Do we want to increase the block size and treat Bitcoin like digital cash and use it for, buying a cup of coffee? Obviously, we want it to be private. So there is a thesis one way or the other, but we kind of revisit the store value versus currency conversation. Feel like Zcash goes more into the store value conversation, but given the rise of AI, censorship, all of these things, we still need a private currency that we can use on a daily basis. How much of a thesis do you hold around a Zcash currency thesis, or are you and the rest of the Zcash community almost fully gung-ho on Zcash as a store of value?
So the community is very focused on making it a means of transaction, making it a money, right? That's what Project Tachyon is focused on, increasing the scaling. So that's super important, and I think that's the long-term goal. I hesitate a little bit comparing Zcash to something like a private stablecoin because I don't actually think like the private stablecoins are private, right? Like if you just put USD, if you figure out a way to sort of I don't know, shield whatever the mechanism would be to shield USDC, you're still holding a stable coin that is essentially like it's sort of like a mandated CBDC, right? Like it's only one one sort of layer removed from a central bank digital currency. So I mean, yeah, to the extent in the future, can there be like some sort of algorithmic stable coin that's shielded or decentralized? I mean, those things haven't really worked. But that's why super focused on Zcash is both a store of value and this global money that can be used privately all around the world.
Yeah. Will, man, go Knicks. Go Knicks, baby. Let's go. Thanks for your time, Will. Zcash is remnant of early Bitcoin days. We were early 2017, late 2016 over here. You remember the volatile days, the Bitcoin Cash hard fork, the SegWit debate, the China bans.
The Zcash launch on Poloniex of 7 Bitcoin for 1 Zcash.
We were there. It feels like early Bitcoin. It feels good. It feels like something worth fighting for in an era of the space looking into the mirror and somewhat of an identity crisis as the adoption of technology has happened. Disruptive technology is hitting the mainstream. The space appears to be in this identity crisis. Zcash feels like a way to return to fundamentals. And so for that, we appreciate your time and appreciate your work.
Thanks, guys. Yeah, totally agree. And thanks for having me on.
Cheers, Will.
Absolutely. We'll see you next time.
See you guys.
Keep crushing, man.
Will.
Peace.
Thanks. Peace.
Alrighty, guys. Nathan says AI agents will need identity, permissions, reputation, private memory, transactions, confidential data access. Zcash wasn't built for that, and I think that's where it gets left behind. Okay, interesting. I mean,
it's a question of, I think it's a question of whether you have that at the asset layer or you have that at the protocol layer. Because you can use something like Near or Zama, and you can hold these things in a confidential way, right? Zcash is private money. You can shield these assets, it's quantum resistant, all these things, especially after Tachyon. Maybe it doesn't get you all the way there based on what Nathan is saying here, permissions, reputation, identity. But once you combine a private asset with private rails, I think you can get much, much further along.
Yeah. I mean, I I think that Zcash is going to do well no matter what, and I'm excited. So, guys, we're going to get back to the news. We got 10 more minutes until our guy from the Relay team is here. Let's flip over to Hyperliquid Perps are now live on near.com. So you can deposit any asset from 35 chains directly into Hyperliquid, access 50 markets, up to 40x leverage. Confidential perps are coming next. This is something, guys, that I think privacy is going to have a really, really big splash in. While the beautiful thing about Hyperliquid is that you can see everybody's positions, you have open, transparent access to the funding rate. I do think that we're going to see a need for the confidential perps, confidential kind of growth. IOB says, I know Quai Network designs private stable coins, QI and Quai feel like a programmable store of value. I agree, they're trying there. I'm not sure on the level of adoption quite yet for them compared to something like a Zcash or to like private near intents. Let's play this video real quick and then we'll keep it rolling. But I think this is big. You can now confidentially transfer assets from any chain via near intents into Hyperliquid.
Hyperliquid.
I mean,
very cool to see.
I thought we already have private perps in Hyperliquid. It's called Silhouette. Yes, I did get a DM from an old friend, Jedi, about Silhouette. Private perps trading on Hyperliquid. I thought that was great. And I think we'll see more of that, guys. So I think that's a great thing. And I think that we need to see more of it. We want to see more of it as well.
Yeah, and I think more people are going to implement this. Obviously, we saw several wallets and front ends, Trade XYZ, all implement perps in the back end. Near is effectively doing the same thing. The thing is, Near has the ability to do this confidentially. Yeah. And so they've gone and done the same thing, but they have privacy enabled. So you guys can go to near.com. You can turn on perps in your near.com account, fund your Hyperliquid account with any supported asset from any supported chain because it has near intents underneath. That's automatically swapped to USDC using near intents. Go long, go short, hedge what you already hold, set your profit, loss guardrails from any chain without exposing your wallet history. Very, very cool to see. I think we will see more of this, and I think Near has one of the more competitive offerings over and beyond just another front end for Hyperliquid perps.
Agreed. Alrighty. We're going to keep it rolling into the next part of the news segment here. Before we do, let me tell you about our friends at CeFi. They are our premier cross-chain partner. Visit Lee.fi, universal market access for digital assets and more. Visit Lee.fi, guys. All right, OpenAI is looking for a 20-year-long lease on a totally unbuilt and theoretical 10-gigawatt data center that NVIDIA would partially finance, utterly farcical, and we're at the end of the line, folks. So, I mean, this just reads like super bearish. Like, I don't really have a take on it, but it reads super bearish.
This is pure just narrative building ahead of IPO is what this is.
Advanced talks to be a tenant of a 10 gigawatt AI campus in Ohio. Guys, these things are like large. They are demanding more energy from the grid than hospitals. Like a matter of like multiples. AOB Khan says bullish on Hyperliquid. We say we agree, need to set some lows, wait for an accumulation phase, then we can go again.
Yeah, and if you look at, all the liquidity that's been poured into the system, you see AI going bonkers.
Yeah.
And then you see crypto and where it's at. It's because AI is scooping up all the liquidity.
It is.
Isn't
that what Arthur Hayes' post was about?
Effectively, yeah. I mean, you had more than $1 trillion in net new liquidity added into the financial system. You look at M2, you look at financing, of general liquidity in the system. And yes, new liquidity has been added into the system. And generally, when that happens, crypto does well because it is a reflection of the liquidity in the system, especially something like Bitcoin that has zero fundamentals, zero revenue, zero activity other than just a meter of the amount of liquidity in the system.
Dude, this guy's having too much fun today, man. Oh my gosh.
And so when that happens, you'd expect Bitcoin to go up. But all the liquidity is getting scooped up by these AI companies.
Scoop.
Guys, I think Knicks got game 4. What I don't want to see is that the Knicks win in San Antonio, because that would be boring. I want them to come back, win in New York.
Game 6 then.
Knicks in 6. Knicks in 6. I think we're going to get the one today. So yeah, I do think AI has gotten pretty much hoovered up all of this liquidity, and we haven't really seen it transition over to Bitcoin and the rest. The fact that they're doing this, I mean, we also saw that there was SoftBank.
Yeah, is Robbie yelling at you guys, or is he just yelling at me?
Guys,
I think he's just yelling at me. I don't know why he's yelling at me, but
I'm
he's yelling at me.
today. My bags are heavy. I want them to go up. I want them to go up so I can exit a little bit higher before we get 40K Bitcoin and $50 hype.
Oh my goodness gracious.
I think these IPOs are just...
They're coming. Arthur is bearish. Guys, we're going to get into our daily equity segment here. Then we've got our first in-person guest from Reilly, Peter Watts, the co-founder CEO there. Let's flip over to our daily equity segment, and we will get you guys into the know from our friends at Denari about this IPO wipeout that has been happening. Let's get into it, guys, now. $2 trillion has been wiped out from the U.S. stock market in the last 2 hours. This post was earlier today. 2 possible reasons for the sell-off. First reason is SpaceX IPO on June 12th at a $1.77 trillion valuation, raising $75 billion, the largest IPO in U.S. history. SpaceX allocated more than 30% of shares to retail investors, 3 times the industry norm. I'm bullish on that.
I saw a tweet that said, look guys, they're only raising $75 billion. It's not like they're raising all $1.75 trillion. That's not as much money. That's a lot of money for people to go find somewhere, and I think they're going to sell off stocks to go do it.
NASDAQ changed its rules specifically for this IPO, cutting the waiting period from 3 months to 15 days. It enters 15 trading days after listing, putting forced buying around early July. When that happens, every QQQ fund must automatically buy SpaceX, an estimated $22 to $27 billion in forced mechanical buy pressure coming to SPCX. This is to make room.
This is the thesis, right?
Every existing NASDAQ 100 stock gets trimmed.
That's the rebalancing, right? So QQQ is a major industry from Invesco. It tracks a lot of these major NASDAQ tech stocks. All of those get sold in order to rebalance the portfolio so that SpaceX, which is going to launch, I believe, at a top 10 market cap company in the entire world.
Wow.
When it goes live, it will be one of the top 10 market cap companies in the entire world. I think upwards of 7, number 7 in the world. They're going to need to take a major stake in this. And so the thesis is that, yes, all these other stocks, companies, crypto, everything, we're going to sell everything in order to make up the amount of buy pressure that we need to get SpaceX to where it needs to be as a position in these indices. Both retail and institutions are raising cash. Retail to participate in listing, institutions to prepare for the forced index buying in July.
Yep.
So both of these guys are pulling capital from the existing equity structures, and they're going to be just dumping it into SpaceX. We'll see if this is enough to offset the amount of supply unlocks that are going to be coming over coming weeks and months. I think in the 6 months following the IPO, 5x of the initial float is set to launch and get unlocked.
Yep. Yeah.
Man, so but then again, so that is the SpaceX.
That's the thesis. The other one is just the insider positioning ahead of this news. It signals that maybe these large sellers know something that's happening, but I think it's all correlated. I think it's all correlated to SpaceX here.
I think you can
and Trump's bombing Iran again.
Well, there's that. I think you can pull some liquidity, a lot of liquidity from, these names up here. NVIDIA is down 3%, Microsoft 2%. Yep. That's a lot of market cap that's getting, extracted out of those companies, you'd think a significant portion of that is going to make its way to supporting SpaceX's launch. You got to look at how much of that is going into the $75 billion up front. Then you've got to support the price when it launches, as well as the unlocks that are coming over the coming months.
Yep.
I think we can get out of the woods on SpaceX, and I think you can have a little bit of a drawdown on some major names in the Nasdaq and some of the Mag 7, and you can hold up SpaceX. But then you have Anthropic, a month or two later. Then what are you going to do? You're going to draw down the Nasdaq and the Mag 7 another 5% to support Anthropic's raise. It's not going to be as big as SpaceX, but it's going to be $1 trillion, not 1.75, but it is going to be $1 trillion.
It's going to be huge.
And so how many times are you going to be able to do this? You draw down these other names. You have the indices mechanically buy these stocks to rebalance those indexes. I just don't think we can do this 3 times. I think maybe we can do this 1 time for SpaceX. Then you have Anthropic and OpenAI shortly after. By the end of it, the market is exhausted.
Kind of feels like a Bitcoin dominance phenomenon with SpaceX. Bitcoin rises in dominance when people sell alts to get Bitcoin. It is kind of similar to that. I agree. It actually feels more like awaiting the biggest token launch of the year. Yeah. It feels more like the Hyperliquid token launch, and when it just sent and everyone was trying to buy it, or even like Monad, if they launched a year earlier or something. It feels like that to us. So guys, that's been our daily equity segment today. Shout out to our partners at Denari for powering the daily equity. Guys, we have Peter from the Relay team here in the Empire State Building. We're gonna get him set up, guys. Don't go anywhere. We'll be right back with Peter. He will be ready to join us on the show in the Empire State Building, live in the nest. See you guys in just a second.
We get deeper. We get deep. You know we get deep.
Guys, we are back here at the Tokenization Tower live with our friend Peter Watts, the CEO and founder of Reilly. Reilly is one of the dominating interop protocols in the space, making a ton of money, fulfilling a lot of the promise. Peter, how's New York treating you? Welcome to the studio, man.
It's great to be here. Good to be back. Lived here for 10 years.
Really?
Yeah.
Where at?
Everywhere, you know, start in the center and then slowly go further out into Brooklyn.
Nice, sir. That's how it goes.
Man. So what's the main prerogative here in New York? Obviously, this is like the institutional era of this industry, right? It's a lot happening. There's a lot of allocators, asset managers. You know, what are you talking to them about? How's these conversations going?
Just came for this, you know. Now we've got a ETHConf this week. We have an office now in New York, so we're all over the world, but got a few people here, so lined up a few things, and yeah, it's just good to. It's the place to be.
Yeah.
Peter, maybe you could give us the download on Reilly over the last couple of weeks. Obviously, interop has changed dramatically. We covered it in depth, speaking about it from really the origination of kind of this multi-chain world. And then, you know, shortly thereafter, it became obvious that we're going to need to connect all these chains, compose across them. What has life been like at Reilly over the last couple of months?
Yeah, I think interop historically has been just like bridging, and you know, for a while there was kind of an insane number of chains. I would say it's like starting to concentrate. Like I think we've peaked at the number of chains, and now we're starting to remove a few. Like this, you know, we're still at like 80 chains, but it's definitely concentrating. At the same time, you've got kind of Arc, Robinhood's, you know, like a bunch of people kind of doing new chains. So they're still coming out, but there's definitely some consolidation. And then I think, yeah, it's like moving from just bridging to more integrated, you know, where you're onboarding directly into an app. You don't even realize you're bridging. It's like, I'm just depositing into Polymarket. But behind the scenes, that was a bridge. And in Polymarket's case, it's not even the native USDC. It's some weird thing under the hood, but the user doesn't need to know. So that's kind of always been our thing of how do you integrate a swap into that bridging experience? How do you kind of make it extremely fast and kind of seamless and abstracted? So I think just, yeah, scaling that up and definitely a shift from kind of like ETH, where we kind of started, all the rollups kind of ETH denominated, much more stablecoin driven these days. And yeah, a lot more app driven and just like straight into the app. Don't even realize, like from people's perspective, they're just kind of moving funds between Polymarket, Cauchy, Hyperliquid, Lighter, and it's just like feels like kind of transferring between apps, and you know, interop is about making that seamless.
So using a couple of those concrete examples, you mentioned like Polymarket, Cauchy, Hyperliquid, Lighter. Like if I'm moving from Polymarket to Cauchy, for example, do I ever interact with the Reilly front end? Is Reilly facilitating that transfer if I'm doing that? How do I go directly from Polymarket to Cauchy or vice versa? And what is the experience like, and what is the interaction with Reilly?
Yeah, you're not using the Relay front end these days. And the front end was really important for us to kind of prove what's possible. It's almost like a demo app. Like obviously a lot of people use it. It's convenient when you kind of know exactly what you want. But it's very crypto native, right? It's not abstracted in any way. It's like in your face. You have to pick exactly what you want. Whereas, these applications, they have their built-in onboarding ramps, and we often power those under the hoods, both for official UIs or some of the third-party UIs for Hyperliquid. And so, each of them will build their own like nicely integrated experience where it's like, I want to deposit funds. Where do you have them? In the case of Polymarket, for a long time, that was USDC.E, like the old USDC.
So we got Polygon.
Yeah, so we're facilitating not only people bridging into Polygon, but then that kind of swap into the kind of older USDCE. Now it's PUSD, like their own little wrapper on top of USDC. Right. And so, we, allowing people to kind of, instead of like multi-hop, like I've got to swap to USDC, I've got to bridge, and now I've got to go to Hyperliquid via Hyper EVM. Like we just allow kind of anything to anything, and we kind of have pools of liquidity everywhere, and we can do the settling over bridges and dexes in the background.
What are some of the more notable integrations that Relay has where people are using Relay but they may not realize it?
Yeah, I mean, there's kind of like two levels often. So we power fun.xyz, which is like an onboarding for Polymarket and a bunch of other customers. We power, Privy recently announced their deposit addresses, like under the hood, that's Relay. So, we have some direct relationships, but also, we're very low level focused of how do you have the best possible liquidity. And it's kind of nice to partner with some of these other teams that are out there kind of like signing the deals and kind of figuring out what apps need. And so, we work with a lot of the kind of developer platforms. Mesh is another one. And so, not only are you not using the front end, but you might use another developer tool and not even realize that kind of under the hood we're often kind of doing the actual kind of last mile of kind of making it work.
Yeah. And you mentioned kind of this consolidation of the chain side, and what we've talked about right now is strictly around applications, but also around specific assets. Would you say that Relay's perspective of the world has shifted from a sort of a chain centric into more of like this product centric or asset issuer view of the world?
Yeah, I think the word interop has maybe historically meant chain interop, but you can think of it as asset interop as well. Like you need to seamlessly move between these, and it's different to exchange. Like exchange is like trading, you're speculating on it, but it's, interop, the way we think about it is I just want to kind of like go over here and like under the hood that might involve some exchange, but like usually you're willing to, pay a little bit more to just have it work every time. And there's also like different needs. Usually if you're onboarding into an app or buying something, you need an exact amount on the out. Most trading exchanges, dexes, dex aggregators, they all work off exact input. It's like put something in and then like randomly like there's going to be some slippage, I'll take whatever I can get. Whereas when you're doing payments, you need exact amounts. So it's definitely shifted to kind of thinking about assets. I think stablecoins have also gone through a bit of like expansion where everyone was going to have their own, and then it's like maybe it's like not as crazy, and you're seeing it consolidate. So even things like USDG is an interesting one that's like starting to emerge, that we're seeing a few apps kind of like rally around that rather than all do their own. But then we're also seeing MetaMask and Phantom kind of having their own. So I think it's like somewhere in the middle where it's like it's not free to have your own stablecoin in the same way it's not free to have your own chain, because then you need to think about bootstrapping liquidity for it. So there's like some bar to clear, but at the same time there's nice advantages to having your own. And so we are also shifting from like historically chains were the main people we talk to, but a lot of talking to asset issuers and how we can make sure they have liquidity in their chains. Still predominantly kind of US stable coins, but definitely FX is kind of like on the horizon. And again, it's the same thing. It's like you need interop between currencies. You need it to be seamless. And, that's what I would argue credit cards do. You just kind of go to pay. You don't have to care what, maybe the analogy is like, I don't care what bank the merchant uses. That's like the chain. And I also like don't even care what currency it is. It's just going to work every time. It's going to swap in the background. And yeah, you might pay like a fairly wide spread, but you just don't, you just want it to work and move on. And we're kind of seeing the same thing play out.
Yeah. And for a long time, users had a similar point of view. It would essentially be, okay, we're going to go to this chain. Started with the chain, and then we knew that there was going to be a decentralized exchange on that. We knew that there was going to be a lend borrow, a yield aggregator. There was apps on this chain. We would go to that chain to use those apps. Now it's much more the asset-centric view where, hey, I want exposure to this asset. I don't really care if my stablecoins are here or there, if my ETH is here or there. I want to do the thing. I want to get it with this asset wherever that chain or that swap takes place. I just want it to be better, cheaper, faster. I don't really care where that takes place. Yeah. Given that you've seen a bit of a consolidation how around some certain assets, certain chains, how does that change the business model of Interop? My understanding of, previously was that, you would go, the more chains, the better, because people are always trying to go to those chains. The more assets, the better. People are making more swaps. But now that we've consolidated around, deep liquidity in a smaller set of coins and a smaller set of chains with deeper liquidity, how are you rebalancing or optimizing, Relay's business model and the business model of Interop as a whole?
Yeah, I mean, I think even if it consolidates a little, it's still fragmented, especially when you think of the permutations of like, okay, maybe there's only 10 chains, but now there's USDC on every one of those chains, there's USDT on every one of those chains, and kind of 10 other stable coins. Now you've got 100 permutations. And so the other thing we've seen is like, you might have like the main 6 chains, but then this wallet wants the main 6 plus this one. And then the next application needs these ones plus, everyone's got their own like bespoke needs for, whatever reason. MetaMask really is like tied up with Linear. And so you still kind of like need a lot of them. And then it does allow us to kind of concentrate liquidity in some of the majors. And so in some ways it makes it just allows us to go deeper on those big ones, but it's far from like, there's still a fragmentation problem. You still have like, there's the duopoly, but just the fact that it's like, they really kind of are 50-50 in terms of like USDC, USDT, like they're winning in different ways. And so the amount of people that need to go between these is significant. You still have Tron USDT like sticking around. And that's one of the like most painful corridors. And then, you're going to start to see, I think, USDG appear in more places. And so it's consolidating, but it's certainly not consolidating all the way into a monopoly where you don't need to worry about it. So the business model is really the same, where it's just, deep liquidity and like also I think rather than a race to the bottom on like best possible price, we've always kind of focused more on like reliability. Like how do you just make it work every time? And I think what we find is like people are willing to pay a little bit more for that kind of like clean experience. The other thing is just like thinking a lot about how can we have price stability. So even though these stable coins, like they're not actually that stable, they're kind of floating on the market. They're trading, at a 15 BPS spread. Once you get into these kind of like more consumer use cases, they expect them to be one-to-one. Right. So this is another kind of opportunity for us of like, how can we smooth that pricing out, kind of like give the applications and the businesses that maybe want to subsidize the fluctuations. So like, I think the users will, in the long term, get one-to-one, but that doesn't mean it's not going to cost one-to-one. Like there'll still be costs around kind of trading between the, the underlying stables, but I think the applications will subsidize them. But then even the applications want, they want to know what their costs are going to be. So they need, stability. So definitely that's kind of something we've increasingly got into the game of how can we offer stable pricing and how can we kind of like absorb some of the volatility. And I think apps are willing to pay for that as like a really kind of nice convenience for their users and stability, understanding their costs, because the apps can make money in other ways, whether that's on, their core application or the yield on the balances. So that allows them to kind of fund and subsidize the trading costs. So even if it goes to one-to-one, there's still revenue for us.
But why is Relay or Interop Protocol as a whole, why are you guys the right partner or, the provider of this opportunity to absorb that price difference and smooth out those stablecoin fluctuations? why, if I'm an app that holds a lot of USDC, why don't I go directly to Circle or directly to Tether, say, hey, I've got, all of this. I want to anchor this at $1. Can I do redemptions for you? Like, you guys are at a unique position in the market. Why does it make sense for you to provide this smoothing function to stablecoins?
Yeah, I mean, I think there's like different layers of it, and I mean, one of the reasons the fluctuation exists is because you have these redemption fees. It's like 10 BPS to redeem USDT into USD, and then so it's actually hard to arbitrage it because you're paying fees, and that's like why some of it persists. And you can get cheaper deals if you're doing bulk. So I think it's just like the reason people like Relay is it's kind of like it's all in one. They don't have to stitch together inventory management and routing, and it's just like, okay, it's one system that I can just any input token, any output token, maybe I'm then depositing into a vault, and it's just all handled for me. So I think the bundling kind of is convenient, and we can kind of go up the stack and just solve some of those problems for people. And people seem to like kind of getting it all in one.
Yeah. And then Peter, could you talk to us a bit about the revenue story for Relay? What has the growth been like? What are the core business lines? Obviously, you guys have just completed a raise. You announced the Relay chain pre-token. We're in this era of revenue driving to token holders, businesses on chain. From the investable asset perspective, people want to see this. What is the Relay revenue story, and what are the business lines of Relay now?
Yeah, I mean, we have revenue, and this is a really nice position to be in, and thinking about what we want to do with that. I think definitely historically kind of the way Relay has grown is revenue is being fed back into liquidity. And so that's one of the things we're thinking about, of rather than these maybe token burns, it's how can you actually take revenue, feed it back into a way that kind of fuels growth. So I would say we're taking it slow and not rushing into kind of one model or the other, and still kind of proving out demand and scaling it, and just keeping very product focused. I think we'll get to some of these other things eventually, but
perhaps that just give us the sense of the business lines. What are the drivers of revenue, and what has the growth been like?
I mean, we really have one business line, which is taking a bit of a margin on a swap, and it's extremely kind of clean and simple of that is what we do. Now within that you might have sub lines. So I think the volatile currencies, allowing people to go BTC, ETH, Sol into stables or between them. So, and we have apps like FOMO. So this is kind of the trading category, and their needs, and the sort of revenue you kind of see there on the longer tail tokens, very different to kind of stable to stable. And so that kind of business line is how do we maybe provide price stabilization, and that's something that people pay for. So even though the end user gets one-to-one, we can make money on it. And things like onboarding is a really big category, which is somewhere in the middle. It's still people going to apps to trade, and they might be doing volatile currencies, but just the needs again around it working every time, maybe exact output. So we kind of have these different categories that we're serving. To be perfectly honest, we talk a lot about payments, and it's still early, people aren't really buying things, but it's building. We're making sure we're kind of ready for that. It's still kind of a lot of bridge and swap, a lot of onboarding into apps. But at the end of the day, the business model is just kind of an exchange basically, and being able to have a fully on-chain business model that takes money on that. We don't ever charge chains or kind of stables to support them, and this is a deliberate decision. Because when you have that business model, then if your customers want you to, and your users want you to go to a new chain or support a new asset, but that chain or asset isn't willing to pay you, then you're in this stalemate. So we've always kind of tried to keep it extremely simple, where we can be everywhere and really deliver what users and customers want, and then just have that model of taking a spread on the kind of exchange basically.
And then just real quick on that note, is the revenue story a significant, is it a hockey stick story where it was a slow couple years and then there was explosive parabolic growth? Has it been more linear? You don't have to tell us the exact quantity of numbers, but percentage wise, or kind of year over year, what does that look like?
Yeah. I mean, we had a year of it's always kind of follows the market a bit, you know? So like it goes up and down. I think like January last year, we kind of went to Solana, and like from there, it's been kind of nice growth, but it'll also kind of go up and down. But like, yeah, the general macro is that we're kind of compounding. I'd also say we're nicely shifting from like one or two chains. So it used to be that like we were making all our money on DGN chain, and then like, you know, it goes away, then Blast would come up. So it's like very concentrated. Whereas now we're like, you know, much more distributed across like different chains, different assets. It's much more kind of stable, kind of continuous revenue. And that's kind of a focus of like, how can we be kind of more resilient against kind of the market going up and down? And I think that's why we've kind of latched on a bit more to payments and onboarding. Like, you know, like onboarding demand to Poly market has not slowed.
No, not at all.
You know, despite kind of, you know, trading has slowed significantly. So the more we can kind of like diversify, that's kind of how we're thinking about it.
We've got a lot of LFRs in the chat. People want exposure to this thing. They want to be a part of this thing, Peter. I'll tell you that.
And I mean, what you're saying makes a ton of sense, not just in crypto, but in general business logic. The more distributed, you know, lines where your revenue comes from, or where, you know, you're more distributed your customer set, the more durable that is. You know, one customer can leave, it doesn't really affect your business. You also mentioned how, you know, there is essentially one business line with maybe sublines to that. I think that's the way to go. Like, I was having this conversation about where to go to eat the other day, and it was like, why am I going to go to this generalized thing? They do everything kind of 80%. No, if I want a cheeseburger, I want to go to the place that makes 1 million cheeseburgers a day. They've been doing it for 40 years, right? That's the one thing they do it extremely well. And I think the same can be true of exchanges, trades, you know, going chains, interop. That's where you guys make your money. That's your bread and butter. So it makes a ton of sense to focus on that, do it really, really well. When it comes to revenue and how you reinvest some of the profits because you guys are revenue positive, you know, we talk a lot about buybacks. We also talk a lot about reinvesting this into the business. And you mentioned that kind of the tried and true way to do this has been reinvesting into sources of liquidity. I want to pair this with, you know, maybe the asset-centric point of view. So I'm curious maybe where there are less pockets of liquidity that you think are a bit underserved. Because from my perspective, this might be RWAs, where we know that there's, you know, high quality assets that are out there that are getting tokenized. They may not have a lot of liquidity on chain right now. And you know, that's because they're rather new in terms of their tokenization lifecycle, but they could also be, you know, pretty reasonable, you know, treasury allocation strategies, right? We had someone in here the other day talking about, hey, rather than, you know, buying back your own token and burning that token, why not, you know, use your revenue to go buy tokenized S&P, buy tokenized Anthropic and OpenAI shares is what this person was telling us. And that'll get the community fired up. So I'm curious, as you're looking at reinvesting some of this revenue, are there underserved paths or assets that you can help facilitate and bootstrap some growth of those tokens and those paths with your own revenue? And generally, what do you think is the reinvestment strategy for the most business growth over the near term?
Yeah, I think there really is like two liquidity areas. You've got like the core assets that you're just turning over a lot around USDC, USDT, ETH, BTC on major chains. And then you have newer assets on newer chains, like the infinite list of RWAs. And we kind of think about it in two ways, where the protocol might generate revenue and you almost want to have like, the direction we're thinking is you have protocol owned liquidity, and maybe like the protocol gets first dibs on kind of providing the liquidity and earning the revenue, right? Because anything you allow external LPs, you're actually leaking revenue to those LPs, or if you have curators, you're leaking revenue to these other actors. So like we're thinking more in this direction of how do we vertically integrate, and so maybe the protocol, when it earns revenue, it uses that for liquidity, and then it can earn the next kind of like round of revenue. But that gets hard when you get to the long tail. Like it's very capital efficient with the majors where they're kind of turning over. So I think like leaning on external LPs that can come in and provide liquidity for these other tokens. And what's nice is, you know, someone might want to be holding these assets, you know, for speculative reasons, and then they can stay long that asset and kind of contribute it into something like Relay and earn yield on top of it. And this is actually one of the ways we're thinking of how can we solve it so people can provide liquidity in a single asset. You know, historically, AMMs, they require you to like put BTC and USDC in, and then as Bitcoin goes up, you actually like sell off your Bitcoin.
Right. Impermanent loss.
And so yeah, we're thinking a lot about how you make it possible to provide liquidity to long tail assets and stay kind of long while like earning some yield.
And
on
this
top.
is the productive asset theory, right? This is the idea of like, hey, if I tokenize my S&P shares and it is going to be speculative and go up maybe, annualized 7 to 10%, but I can add an additional 1 to 2% yield on top of that. For an asset of that size, this is massive potential value unlock because you're providing liquidity to this market. You're getting some yield as people are going back and forth in this asset. And so as you're thinking through protocol owned liquidity, maybe we'll talk a bit more about the RWA strategy. Is this where you think protocol owned liquidity could help facilitate and bootstrap, the composable tokenized equity, asset class or the RWA asset class? How are you thinking about RWAs on chain in Relay?
Yeah, I think it's still early. Like there's some really nice kind of developments, but like it's still kind of painful. Like honestly, the most interesting things I think are happening in perps and prediction markets around kind of off hours trading, kind of pre-IPO stuff. And so we're definitely like paying attention. And in some ways, like at least today, the biggest way we're contributing to that is more like enabling people to onboard kind of into the applications where they can trade those things. But yeah, once you start to get more kind of tokenized stocks and like how can you solve liquidity for that, it is like one of our goals, especially if those are, the same asset is issued on multiple chains. You have this problem of like, are you going to have liquidity like on each one of those chains? And one of the ways we think about Relay is like people mostly think about it for going cross chain. But another advantage of it is if you can have liquidity for a pair in one place, then that same kind of depth of liquidity can be available on every chain. So you might actually just want to buy an RWA that's on Solana with Sol, but with kind of USDC on Solana, but instead of having a local DEX there and then having to have one on Base and one on Ethereum as well, it's like how can we have liquidity in Relay so you can almost like go to Relay, do the swap at the best price, and then come back to the same chain. So like it's something we want to get to over time is how can we actually support same chain swaps by kind of concentrating liquidity in one place instead of having to recreate liquidity on every single chain. So early days, but solving the longer tail is kind of something we think a lot about, and it just kind of requires different types of AMMs, I think, that and like liquidity models that haven't been required when in the past.
Yeah, I mean, on that note, Peter, actually specifically, I remember in the earlier days of Relay, you guys opted for a model that was far more capital efficient, far more viable and scalable, but got a lot of pushback from like the L2 beat type crowd. And I remember talking about this in Buenos Aires, talking about kind of like what that progression looks like to a you could say a more distributed system. Can you just give us an update, give our audience an update on that? What has the thought process been there? I do feel like the space has kind of shifted into a product maximization from a UX perspective, from a just this thing works, it does a job every time, it does great. Now we're in this era of mythos and AI honeypot linked exploits, and people are really tweaked out sentiment-wise about their assets on chain. What kind of words can you give to the community about the security parameters from Relay? How do you think about this as a CEO?
Yeah, I think we've been going through, we're very product driven and pragmatist and kind of have gone through an evolution of the product and the protocol. And yeah, I think earlier this year kind of rolled out the chain and kind of like got to the point around how the cross-chain orders are settled, and increasingly now thinking about on-chain liquidity, how we decentralize liquidity, and it's definitely scary, Yeah. But I think the flip side is like we've never been in a better place to kind of like build hardened software. And you look at most of the exploits, they're actually kind of not in the code. They're kind of the OPSEC of the team that has admin control. The other thing I'd say is like Relay is very capital efficient. You look at something like Morpho with like $11 billion in deposit, that's real scary. Whereas Relay can kind of, and it's common in any DEX where you can actually kind of recycle the capital for people trading back and forth. So you kind of need less at risk. And that's another reason we like the idea of protocol and liquidity. It's like, okay, it's like it almost, the risk when you bring in external LPs and what that might mean versus the protocol itself taking the risk. And the more risk the protocol itself takes, the more revenue it can kind of keep for itself. And so I think this like more all-in-one vertically integrated is a bit of a way to do that and move faster versus have billions of user deposits and that kind of be weighing on you. We're like hopefully much lower down the list of honeypots versus some of these kind of lending protocols. Yeah. But yeah, I think the defense, it's never been better. Like formal verification, these things that just like you just couldn't do them. It's just like sounds great in theory. There's no way I'm going to do that. Is actually becoming plausible, and so I'm more in the optimistic camp that we can get to a good place and have really secure on-chain protocols.
Yeah. We have a similar take, and we've been seeing a lot of this, and it's just like this hardening of software. Like there's two ways to look at it. It's like software's over, or like we're entering the golden era of unfuckwithable software because of the ability to go on offense rather than just have to play defense. Question here from the community: Reilly has no dreams of becoming an L1. Is that correct?
Not really. Yeah, I mean, we talk a little bit about our chain, but very little. We see it very much as like a behind-the-scenes kind of piece that just allows us to get done what we need to get done, and just having our own chain means we can do things like put precompiles there and not necessarily have to be blocked by the roadmap of another team. And I think that's where things will go, where chains are they're less culty and they're more just like under the hood infrastructure.
Yep.
And no interest in kind of competing with the L1s that are getting applications to deploy on them. It's very much an application chain that kind of gets what we need to get done, and kind of connecting every other chain is kind of the goal.
I think that was a very strategic way of asking when token, if you ask me, but I don't know.
I've got a different question, so we're gonna maybe move off that. Maybe we'll come back to it. But
probably won't.
One of the things that has gotten quite a bit more attention, and you mentioned kind of the old way of doing the AMMs. It was, you have to put 2 tokens in, you get some impermanent loss, right? Now we're shifting towards more of this, concentrated liquidity model, maybe with protocol owned liquidity. You go there, you get efficient pricing, you go back wherever you need to go. We've also heard of this prop AMM meta. Can you just describe, like, is this orthogonal to the whole AMM complex, or is this an evolution that inevitably everyone in the AMM and interop space will end up at?
Yeah, so a prop AMM is basically a single market maker that can like write a program that can like adjust the prices extremely efficiently, and what's great about it is they have a ton of control. Like instead of having to kind of like put orders in an order book and cancel them or try and concentrate liquidity in an AMM, they have full control around where they place liquidity. They can even like give different prices to different wallets or integrators, and it is leading to tighter spreads. I mean, it creates problems around now you need aggregators to kind of stitch it all together, and the work of an aggregator becomes harder. But it's definitely like a step. It's like ultra concentration of liquidity, basically. The problem is, and it's really good for trading. The problem is that if there's any stress in the market, they will just disappear. They'll pull their liquidity out. They're extremely mercenary. You've probably heard stories of them like doing tricks of like quoting one thing and then like changing the price in the background, like trying to squeeze as much out of the slippage as possible. And I think that's one of the reasons where, tying back to what I was saying earlier, like when you're like onboarding into an app, like, or making a payment, you actually don't need the absolute kind of like tightest spread. You just need it to work. And that's one of the, nice things about more traditional AMMs. They were kind of bad for LPs, but like they were always there. You could always trade. It just wasn't as efficient, but like in terms of utility and liveness, they're really powerful. And so I think the other thing is that you also have price discovery. And so prop AMMs can actually bring price discovery on chain versus something like Binance, because potentially, that flexibility allows the market makers to go more aggressive. But again, like if you're onboarding into an app and you just need exchange as part of that, like Relay is not doing price discovery. So Relay can do something that maybe leans on an oracle, that maybe has a wider spread. And so we're almost playing an entirely different game. So like, I think the answer is both. You'll see prop AMMs as like an extremely important mechanism for price discovery and trading and kind of like all of that. But then when you have use cases that need a trade as part of another action, you will almost want entirely different liquidity forms that are optimized for that. And I don't think prop AMM is the right model for that because they are mercenaries, because like you can't rely on the liveness. And that's what we're thinking about, of how do you have something that's always there, that works every time, probably doesn't have the best price, but it's gonna, achieve the properties, or even the capital efficiency, right? Like we have to deal with 50 versions of USDC. Yeah. So we can't have like pair pools. We have to find it's almost like you've got like traditional AMMs with volatile pairs, and you had correlated pairs like Curve. And then you have like, if you think cross chain is like ultra correlated, it's the same asset. So you can kind of trade it on a flat curve. And it's just like a different, mechanism that doesn't exist, but we're kind of looking about how we can take what we've developed in a solver model where we kind of had a lot of control over how it's priced, and how we can kind of turn that into an AMM and move it on chain is kind of like the rough direction that we're looking to go.
Yeah. Peter Watts, what a run, huh? What a run. More revenue, please. More. We need just a couple months, a little bit of winter, and then we're going to go right back up. Revenue's going to come back in. All-time highs 2027, 2028. All right?
I'll do my bit.
All right. All right. Peter, well, thanks for spending some time with us. Congratulations on the success. Hope you enjoy the rest of your time here in New York. I know it's a bit warm in here, so thanks for bearing with us and sharing some insights on the business model, on the interop landscape, RWAs, prop AMMs, everything in between. Really appreciate it.
Thanks for having me.
Thanks, Peter. Alrighty, guys, we're going to be back with our next guest here in the tokenization tower. Be right back. We will just make it just a second. We're going to air this place out. Check the charts. Don't look. Keep the education flowing.
Oh boy.
All right, guys.
See you in a sec, guys.
Alrighty, guys, welcome back to the Tokenization Tower. We're here with William Reilly. William is not his first time on the show, friend of the show, longtime guest. Prediction markets are heating up amidst the FIFA World Cup, although I did see that they were that they were short on selling tickets. So I'm not sure what's happening there. Will, good to have you. Welcome to the tower, man.
Yeah, great to be here at HQ. Beautiful view, beautiful view. Always a pleasure to be with you guys. So thank you.
Likewise, man. It's a pleasure to have you back. Always fun to chat prediction markets. I think maybe the last time we were in Cannes.
Yeah.
If I recall correctly, you guys had started working with these prediction markets on some of their shorter time horizon, maybe 5 minute, 15 minute, up and down markets. Now getting more into the World Cup, coming to New York and the US as a whole. Maybe you could just talk us through, FIFA is not really, the official prediction market partner isn't Kalshi or Polymarket. It is ADI Predict Street.
Yes.
Maybe you could just talk us through why, how Chainlink was able to partner with them and what you can expect from prediction markets here for the World Cup.
Yeah, fantastic. So for starters, we have a great relationship with ADI. We're developing partnerships with them in several ways. They came to us and they said, hey, we're launching this Predict Street prediction market, and we're the official partners of FIFA, exclusive partners for prediction market in general. Working with them on deploying a number of different product lines for Chainlink, including Chainlink Runtime Environment. So we launched that on ADI Chain recently, and we've been working very closely with them on setting up their resolution mechanics. So pulling in data straight from the FIFA data provider that they're working with and having that run through the Chainlink Runtime Environment to settle their markets on the ADI chain. So you're getting the same cryptographic benefits, decentralized tech that Chainlink powers most of DeFi with today, but using it in kind of an Oracle as a service platform to do bespoke data delivery. And in this example, we're looking at FIFA for Predict Street.
Yeah, and so this is an important proving ground for Chainlink for sports-powered markets, right? It's kind of a new frontier, prediction markets as a whole. Why is this so important for Chainlink today to kind of establish its exclusivity here and its dominance in sports markets?
So we're really excited about FIFA in specific. This event only happens once every 4 years. Yeah. It's a global event. Just so happens to be hosted in the United States this year, so that's pretty exciting for us being local here in New York City right now. And there's going to be a lot of value on the line, at risk here.
Yeah.
So when somebody like Predict Street is building a system like this, they understand the amount of value that's going to show up. And with that, they take like a security first approach into building. Hence why, engaging with us at Chainlink, where security is our utmost principle, making sure that that data comes on time and accurate.
Yeah. I mean, on time and accurate are going to be two of the most important characteristics for market resolution in these prediction markets. Especially when you have, one thing right after the other. It could be games starting, ending. Can't have, capital locked up in some of these things.
Yeah.
There was recently a contentious MicroStrategy. Are they going to sell Bitcoin in May or June? They ended up selling, but it didn't get announced until the following month, and so there was a lot of confusion and contention with how that market was going to resolve via the optimistic oracle that Polymarket used for that market. Chainlink uses a fundamentally different market resolution mechanism. In this case, you described, Predict Street's got an official FIFA, data provider. Maybe you can just explain the differences between using an optimistic oracle, how it can run into issues like we saw on that MicroStrategy selling Bitcoin market, and how using this official FIFA data provider can help avoid those issues and unpack some of the differences between these two mechanisms.
Yeah, of course. Great question. So ultimately, when you look at optimistic oracles historically in their application, they come down to human subjectivity and understanding of whatever rules were prescribed to the market. This is kind of like being the judge and the jury for something, which you can have different perspectives of what the definition of the words meant or what the meaning of the market was. For Chainlink, which the optimistic oracles also take large amounts of time for that consensus, especially as you said, when games are one on top of another and you want to participate in many games, many rounds, one after another. You want that capital efficiency to come back to you quickly. With optimistic oracles, you generally see 1 to 2 hours for a settlement to occur because you need that human consensus. And then you do run into these discrepancies of what was the intention of the rules itself. Chainlink's approach is we do deterministic market outputs. That's going to be our bread and butter as a starting point. Right now, 80% of the volume that occurs in prediction markets has a deterministic data point attached to it. So from our perspective, it's quite inefficient to scale with this optimistic oracle setup, which requires human inputs. It has the risk of different perspectives of what the truth is. It also runs on crypto token economics, so there's tons of instances where folks are using their crypto stack to manipulate the outcome or sway a vote that's in their favor because they have a position in the market. With Chainlink, we're using deterministic outputs. So with Chainlink runtime environment, we're able to connect to off-chain data sources. In this case, it's the official league data itself for FIFA. So we pull that in, and we can also do some data quality checks across this. One mechanism is observing the status of the order book itself. If you look at the order book, this is a collection of traders all coming to what they see as the truth themselves, and they're financially incentivized to do so. So you're going to have people that are live watching the game, making their trades. Historically speaking, you see the winner of the game trend towards 100%, and as the game concludes, it's quite obvious that they're at 100%, and the other has dramatically dropped down to 1% or 0. So we take the data provider input, we cross-reference that with the order book itself, and then for other markets, which we're exploring things like weather, we're looking at multi-data inputs as well as AI inputs. So doing a multi-LLM aggregation in the decentralized Oracle network to do a triple check against the other data points. So once we see 1, 2, 3 matches across the data, we can deliver an extremely high confidence data point that we have an accurate data for resolution of that market.
Yeah, there was one instance of a guy in Paris who was getting the weather by being directly under the airport weather temperature or thermometer, and then he would literally have a fan and try to cool it down to get it closer to his prediction.
And a blow dryer to try to heat it up.
A blow dryer.
The famous blow dryer incident. Yeah, so we're actually working with the team that was specifically concerned about this event. There's some good and bads to that approach in that example with the hairdryer. The good was you have a single data point, so you know exactly where that data is coming from in the world, and everybody can agree on it. The bad part is single source data points are prone to manipulation, prone to failure. This is like, historically speaking, you look at Chainlink, how we deliver data to blockchains for pricing, we always aggregate across a multitude of data providers.
Yep.
So in something that is fluctuating in real time, like the weather or the temperature or the price of Bitcoin, you ask 12 different data providers, what's the price of Bitcoin right now? You're going to get 12 different answers.
Yep.
And they'll be in a range from dollars to pennies, but still different. Same with weather. So we're taking a different approach. So just using the weather market example, we're aggregating from a multitude of stations across a certain city. We even have kind of quote unquote perfected the one for New York in specific.
Nice.
And then we also cross-validate that with some LLM queries, making sure that we're not seeing some sort of drastic outlier in the data set itself. And then we're able to deliver a more aggregated view of the world.
Yeah. And so in that kind of evolution of the product suite, Myriad, another kind of up and coming prediction market, has also selected Chainlink to be its exclusive Oracle infrastructure for the World Cup and for more sporting events. One ought to think that like these multi-data points and this kind of more evolved view of resolving these markets is leading to a lot of these prediction markets or anything kind of like similar wanting to have the best resolution for their user. So Chainlink kind of setting the standard here for what is possible from making sure that the users are whole always, because at the end of the day, what ends up happening is that if something like this happens, people blame Polymarket for this Michael Saylor thing. That their users get pissed, they leave the platform, they go somewhere else. These platforms don't want that. They want the reliability, and that's kind of where Chainlink comes in.
Yeah, they want the reliability, want the security aspects. And if we just kind of step back from like, what did Chainlink do, or like, why are all these people picking Chainlink now? Well, as prediction markets is growing in the number of platforms and availability and markets out there, we saw the same thing actually happen in DeFi in the early days in 2019, 2020, 21, where we actually saw a number of quote unquote Oracle failures out there because people were trying to run their own Oracle, or they were using single source data oracles. They were susceptible to flash loan attacks, or their Oracle service went down and all of a sudden their entire platform was liquidated. And then enter Chainlink, a standard that is highly secure, reliable, redundant, decentralized. And that's where you kind of see the growth of DeFi. You can almost see it hockey stick once Chainlink's integration first kicked off. Yep. We're seeing the same thing happen in the prediction market landscape from my perspective. We've seen rudimentary oracles try to tackle this problem, but now that the users are showing up, the volume is showing up, the value is showing up, people need a highly reliable and scalable oracle system. And that's where we're seeing kind of what we did in DeFi, we're doing again here in the prediction market landscape.
And then why is CRE so important here? Like, I think people still have a bit of an education gap on what that Chainlink runtime environment provides specifically for prediction markets. Why is that important?
Yeah, so CRE, or Chainlink runtime environment, you can look at it as an Oracle as a service.
Okay.
So historically, Chainlink has been able to build Oracle networks for a singular purpose. So what is the price of Bitcoin? What is the price of Ethereum? We write it to the Ethereum blockchain, and that's all that decentralized Oracle network is doing. This becomes like a very large scaling problem, especially on a horizontal level. And if you guys wanted to, I don't know, have the weather data or sports data or bespoke pricing data that you have access to, you would have to come to us to help stand up a decentralized Oracle network for you. With Chainlink runtime environment, it's an open source developer platform where developers can just out of the box open up, they can start plugging in various data points, they can come up with their own consensus mechanisms, and they have the same decentralized benefits that we've provided in the DeFi landscape, but now you get to deploy it yourself. And then of course, for the teams that want to do this at kind of like rapid or expert level scale, they work with us directly and we help build and orchestrate those workflows for them on their behalf. So think of this as a developer toolkit that allows you to do far more than just pricing. You can do any type of bespoke data, and you can also read from other blockchains itself. The other really great thing about Chainlink runtime environment is you write a workflow once and you can write to many chains. So it's a one and done, one-to-end deployment process instead of having to stand up a singular DON for every single deployment you're trying to stand up.
Yep. And
no, go ahead.
And some of these, these prediction markets span across several different chains. I mean, obviously Polygon has been notable for Polymarket. There's been rumors of Polymarket maybe going to its own chain. Kalshi's kind of in a separate league. Then you got Myriad and Limitless, I think, is on Base, and a couple of these others. And so it seems like this, like DeFi had its very much 0 to 1 moment in that 2020 to 2022 era. It feels like prediction markets are kind of smack dab in the middle of that, but on a much more mainstream level.
Yes.
What do you think the total usability of the Chainlink CRE, or just like the Oracle product in general, could potentially be if you guys can nail the prediction markets kind of sector? Like, how big are we talking from your perspective of like securing the world's markets? And this comes today after the CFTC came out with some guidance around prediction markets, specifically no assassination markets, no fighting during sports games markets, and several others. So there's clearly, we're entering this mainstream regulatory environment for prediction markets too. What is kind of the vision for your view of the scale of this sector and how kind of Chainlink fits in there? So
if you're looking at the sum total of volume today across prediction markets, I think we're seeing anywhere from like 25 billion to 30 billion sum total per month. And we roughly slice that data into deterministic and non-deterministic markets. So deterministic markets are, what's the price of this asset? Did somebody say this word, so a mention market at a certain time? How many tweets did Elon write? How many cars did Tesla deliver? These all have known data points out there in the world. What's the weather in New York right now? When you look at that, that actually represents the lion's share of the volume that's being done across these prediction markets today. We're seeing roughly 80% have these known data points that either come from an official and singular data point, like a league, or they come from a multitude of data aggregators that you can pull from. So that's, again, where we're thinking, why inject human subjectivity into this when there's known data? And when it's data that needs to get to the blockchain in a secure, reliable way, because once that data lands on a blockchain, a lot of value gets orchestrated, much like in the lending markets or the perp markets that we power today. They need that system that's going to deliver without failure, with high levels of confidence. So then you look at the subjective markets. Yeah. So we see this is about a floating 20 to 30% of the volume. And this could be as complex as, is the Strait of Hormuz open today?
Yeah.
You know, which is, you know, depending on who you ask or which data source you go to, you're going to get completely different answers. This is where we've been spending a lot of research and development, specifically in the AI sector, because we need to take subjective data and put some sort of deterministic layer behind it. Yep. And if in the future state of prediction markets that the market itself is comfortable with, let's say, like a Chainlink AI data layer as the deterministic source to a subjective topic, that's where we can go ahead and fill that last 20 to 30% hurdle and then encompass the entirety of prediction markets.
And those markets can get super esoteric. Like
Definitely.
you mentioned, is the Strait of Hormuz open? I mean, on Polymarket, I think they have, is the Earth flat?
Yeah.
Like they've got.
But these are also the most interesting ones that I think have a lot of growth. Because right now, you're right. It's like another sports betting platform for a lot of these, right? Or another kind of like, I mean, honestly, a lot of it's sports, but like it's those subjective, esoteric kind of culture markets that I think could really, really explode.
Yeah, but right now they're accounting for 20 to 30% of the volume. So there is, you know, mostly deterministic. But these are the ones we end up arguing about on Twitter all day. Right. So, you know, they end up being the most fun for us. I've got a reductive question, and then we've got about 5 minutes left, and I think we're going to end off with a fun segment.
Sure.
Reductive question is, you know, more regulation coming to prediction markets, bullish or bearish? You know, you can kind of make an argument both ways. You know, there's a regulatory regime. You know, these things are getting accepted into the regulatory environment. Yeah. On the other hand, you know, this has kind of been a wild west where we do have very esoteric markets. Can make an argument one way or the other. What do you think?
So, look, it's one, I think it's inevitable. Mm-hmm. What it looks like is TBD. And I think it's bullish from the standpoint that more mainstream folks, once they see full regulation in place, they're going to become comfortable. Yeah. And then it also allows institutions that are currently sidelined because of lack of regulatory clarity, they're going to want to hop in and start participating in hedging and diversifying their asset classes and in something called like information markets. Yeah. So now you have like your pure financial markets, but now you're actually hedging your book in an information market. And then you kind of expand on that is you have these very long time frame markets too, like who's going to win the presidential election. Yep. And maybe you think you have an edge. Well, that outcome isn't from now to then, about 2.5 years from now. If you park a large position there, that's a lot of capital locked up into something that you're hedging somewhere else. The next evolution of prediction markets, which will be interesting, is people building financial products on top of them. So you can take that position and then borrow against it. Now you still have exposure
options on prediction markets.
Yeah, and then you're going to go expand that. And I think that's where, when we see the regulatory clarity and we see the institutional adoption, institutions are really going to lean into this aspect, which I find exciting.
Yep. So the CFTC has proposed these new market rules as of today. They are allowing most sports contracts. Yep. So that's going to stay the same. Previously in the Biden administration, they kind of restricted anything to do with violence, terrorism, anything like this. They pulled that back recently in the last year or two, but new rules now about very specific markets towards assassinations, terrorism, violence, but you can still have you can't have a market, will the Islamic regime attack Israel, but you can have a market that is something like more about will they increase the TSA screening in airports in this time. So like there's kind of an interesting dichotomy happening right now.
Yeah, it's very interesting to see play out. I'm excited to watch it unfold and see how the market matures across the board.
The regulators have their work cut out for them because this is such a blurry line, and we can just, especially where I think it is inevitable, some of these prediction market platforms end up in a place where they let maybe community suggested markets or, you know, permissionless market listings. This has kind of been the golden goose. This is what everyone has wanted for a long time, but there's technical complications with it, like fragmented liquidity if you end up with duplicate markets. And then there's obviously regulatory concerns if anyone can create their own market. So long road ahead.
Sure.
Will, I want to play a little game in this segment called Prediction Plays.
Okay.
Just made that up, but you're the first one to play it.
All right.
World Cup is starting. Do you watch much soccer?
I've kind of picking up some Premier League last year, but that's kind of starts and stops then, unfortunately.
There we go. Okay, well, ADI Predict Street, the official predictions market partner of FIFA World Cup, has adopted Chainlink. So we're going to play a little prediction market predictor with Will representing Chainlink here. First one I got to ask you about United States versus Paraguay. It's happening Friday night, 9 p.m. I mean,
is this guy yelling or is this me?
I mean, I'm just fired up here. What do we got? Who you got? United States versus Paraguay.
I mean, look, I don't know how good either one of those teams are, but being a guy from the United States, I'm going to be placing my chips on the home team.
I think they got that one.
Yeah.
I think the U.S. has that one.
I think so too. Coming in at about 50% chance of winning, 29%, 30%
The question
chance
is who's
of draw.
going to win?
Well, I mean,
that's the next one.
heard
Who's going to win the whole thing?
Again, not very studied in the subject, but I hear some rumors that the Spain team's pretty good, and I would imagine it sounds like most of the team from France comes from this very well-known PSG league, PSG team. So it sounds like they'll probably have a pretty stacked team as well.
Man,
they always do. Germany and England have a really good chance as well. Someone in the chat says, way too soon to pick a winner. Injuries will be the determining factor. It probably won't be a European team.
Spain and France leading right now, both at 16% chance of winning. Okay. Germany further down the list at about 5%. England and Portugal up there as well.
This guy says Paraguay will beat the USA. Thanks, man. Sick, dude. You're a vibe, man. You're a vibe. Thanks for joining, man.
First game tomorrow is Mexico versus South Africa. Will, we know you're an expert on this.
All right.
And so, first game tomorrow, 3 p.m. They're going to kick off World Cup, Mexico, South Africa. Who you got?
I'm going with the Western Hemisphere, so we're going Mexico.
Here we go. Will, thanks for coming on today, man. Congratulations
on the growth here, because I think it is a burgeoning market that
for sure
there needs to be a winner of, and there needs to be consistency in the outcomes.
Yeah.
And I think you laid out a pretty good reasoning for the optimistic oracle versus kind of the CRE setup and the trade-offs there, as well as just generally how you think about the broader space. So appreciate your time as always, Will.
Yeah, thank you guys, and keep your eyes out because there's going to be some big news coming very soon across the prediction market landscape and with Chainlink attached to it.
Wow,
so.
that's bullish. You're leaving us on a cliffhanger here. I want to ask more.
This guy just does not like Will. He's just fading every one of Will's takes, man. This guy. Guys, we'll be right back. Yeah. Thank you for rocking with us. We're going to close out the show here in the next 5-10 minutes. Stick
Don't
around.
Go anywhere.
We'll be right back.
All right,
go
thanks,
Knicks.
Let's go Knicks.
Knicks and 6.
Yo, yo, yo. Yo, 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 yo. 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 Hype at 54. Bitcoin 61.8. Nicks in 5 per. Gamma squeezed in the opposite direction that we needed it to. Sol looks ready for 50s. VVV down 14% today. Zcash kind of holding up amidst its craziness. Near kind of holding up as well. Oh, man. Oh, man. Oh, man. Oh, man. One thing that I think is sick, guys, that you guys can check out. I'm going to pull up on the screen. You guys can look at the Hyperliquid yield and the amount of revenue that they're going to make from the Coinbase stablecoin deal on this website. hl.eco/stables, Rob. If we're in a 4.5% interest rate environment, we're literally going to zero. But at least Hyperliquid's making $241,000 a year from it. Where we want to get to and where we're at right now is about that 3 to 3.25% mark. You can see 174,000 right now is where we're at. 160 to 174,000 annualized basis from this $6 billion or so on Hyperliquid. So, gotta get excited about something in this market right now, all right? I mean, look, guys, I don't know what, 2 weeks ago we were like jumping out of our chair. What happened? How did it happen so fast? And I was literally jumping out of my chair. We had capital flows on. We had capital flows on telling us gamma squeeze right here. That is a Christmas tree. That is a Christmas tree. That's a Christmas tree. This thing, oh goodness, another Christmas tree. So, yeah. What's your take, Rob? What's going on out there? S&P down, question mark? I think so.
Where are we buying?
Yeah, I mean, well, jeez.
We're probably going to get capitulation. Probably going to get some apathy.
And you know what's crazy? Like, this is like a cause for concern for like traditional investors, and this is like not even a 10% move. It's like a 4% move. It's like, what? It's like, dude.
Is that the S&P?
Yeah.
Going back to like last year. Maybe this year.
Oof.
Oh boy.
These things don't look great.
That thing doesn't look too great.
I mean, look, we're going to be fine, guys. Just hang on
I think
tight.
we're going to get a bounce. I think as we move lower, bounces are going to get more significant.
You think?
Well, I think, moves down are still significant as well. But I do think that, the market is selling off. At least the rumor, theory, thesis out there, the narrative is that it's selling off because SpaceX needs money. So we're seeing moves down. But I think SpaceX is going to come out on Friday and it's actually going to go up, and then the market's going to go up, and then people are going to be like, "Oh my gosh, it's okay. We're back. We're so back." And we're going to get a little bounce, a little rally, probably like, SpaceX forward is going to do well, but we're not going to get enough of a rally to fund enough support for Anthropic and OpenAI.
Yeah.
So I think we are in this, I wouldn't call it a macro bear market, but I would call it a liquidity crunch for assets in general, with so much supply coming onto the market over the coming weeks and months that we are going to need to take time in order to build up enough liquidity to support these markets. And we're in an environment where like inflation came in today right as estimated, but it was at 4.2%.
Yeah, which is just
high. And so obviously, remember the inflation target for the Fed is around 2%. So especially with labor numbers, where they are, the Fed should raise rates, which is going to make liquidity that much harder to come by, which is going to make funding these IPOs that much harder. And so it doesn't bode well for these IPOs.
Dude, if we can get Sol around like 35 to 45, oh, that would be sick.
So I just think structurally there's not much that we can do here.
Yeah. I mean, you can just be patient. We're in the end of the crypto bear.
Exactly.
We're in the end of the crypto bear. We're in the end of the crypto bear. We're in the end of the crypto bear. We are in the end of the crypto bear. We're 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 in the end of the crypto bear. Great show today, guys. Great show. Fun show. I know things are down. But we're not going anywhere.
We're not even the end of the crypto bear. We're in the beginning of the crypto spring, according to Tom Lee.
We're in the end of the crypto bear, guys.
In the beginning
Guys,
of the
we are in the end of the crypto bear. It is coming. The end is near. It is far closer than what it's been. Every day that passes by is a day until we're closer to the end of it. And yeah, might be a little bit of a slow summer. Okay? We just got to relax. Have some patience. And that is what we're going to do. We're going to be here tomorrow. We're going to be here the next day. And we're going to be there on Monday. And we're not going anywhere. We're going to buy these things and we're going to sell higher. And it's going to happen. So
shout out to Ton tweeting 46 minutes ago. Getting ready for the intern entry, sub $50 for Hype. Thesis hasn't changed though. Hype to triple digits.
I agree.
Ton, I hope you feel better at home. I hope $50 entry on Hype.
Hype to $100 is preordained. Bitcoin to 250,000 is preordained.
Hype in Citrini research was the top.
Yeah, pretty much.
Local,
and Venice.
The local top.
No, but that's perfect. Because like his people watching or reading it are not like our people. They're like reading it now, being like, oh, okay, cool. So Citrini's bullish, we should be bullish too. They're not like, Citrini subscribers aren't like buying that day and then selling the following day. I mean, not all of them. A lot of them are more like larger macro traders that are gonna look to Venice and Hype and be like, damn, this is a good opportunity.
And look, the ones with relative strength in the last couple of weeks are the ones that are going to outperform when the market returns.
I agree. So
I'm looking for entries. I'm looking for entries on Hype, probably around 50. Bitcoin in the 40s.
Wow.
I think Bitcoin in the 40s.
Bitcoin between 35, 45.
You think Bitcoin 50? In the 30s?
I don't know. I would hope not. 35 would be the absolute lowest, but I don't see it getting there.
I don't see it either. I think once we dip below 50 on Bitcoin, I think we're going to get some really intense buying. I think people are going to say Bitcoin under 50, that sounds cheap.
Yeah.
And I think they're going to come in and they're going to buy.
Guys, we're not going anywhere. We're going to buy and we're going to hold and we're going to zoom out and it's going to be beautiful. And we're not going anywhere. We'll be here in Q3. We'll be here in Q4. We'll be here in Q1 next year. You guys will be with us. So thank you. Thank you for being with us. You're watching The Rollup live from the Tokenization Tower, the nest in the financial capital of the world. It is Wednesday, June 10th. Go Knicks. Go smart investors with longer time frames. We're going to the moon, guys. One day at a time.
Stay with us. We're going to be with you. Learn from us. Learn with us.
Same place.
Educate yourself in the bear so that you outperform in the bull.
Ladies and gentlemen, thanks for watching The Rollup. W's in the chat. Much love. Go Knicks. We'll see you tomorrow.
Go Knicks.